LiteFinance, the
Hello, it's Monday, March 18th, and it is time to start the market forecast for this week. So first, let's begin with the calendar as usual, and up front, I need to say that the week ahead is fully packed with key data, so we should get some action on the markets. Okay, today we will get a final Eurozone CPI inflation data and Chinese industrial production. Tuesday, we begin with the RBA interest rate decision. Then we will get German ZEW economic sentiment, Canadian final CPI reading, and BOJ Bank of Japan rate decision. On Wednesday, which will be the most important day of the week, we will get the UK's final CPI and PPI reading, and then crude oil inventories, and the most important event of the week, FOMC rate decision along with rate projections. Next, on Thursday, S&P will make their decision on the rates in Switzerland. Then we will get PMI from Germany, Eurozone as a whole block, and from the UK as well. Still on Thursday, from the UK, we will get the Bank of England rate decision. After that, PMIs from the US will be released. On Friday, retail sales from the UK and another speech from Fed's Jerome Powell. So as you can see, this time we might get some fireworks. But let's switch gears and continue with the fundamental analysis for Euro-USD. So slowing inflation fuels GDP growth. Real hourly earnings rose 1.4% year over year, driven by a more than 4% increase in the nominal indicator and a decline in consumer price growth to 3%. A break-even era is in the past. The population can spend more, which, together with the rising productivity, AI technologies, the influx of foreign labor, and soft financial conditions stimulates GDP expansion. However, the economy is cyclic. If it stands firmly on its feet amid strong domestic demand, the risks of accelerating inflation increase. That's what we saw in CPI and PCE reports in January and February. In this situation, the Fed had better not rush and wait for new data. On the other hand, keeping the federal funds rate at 5.5% for a long time may cool the economy and even trigger a recession. The Fed has to choose the lesser of two evils. The central bank should begin policy easing, but very slowly. Two monetary expansion acts by the end of 2024 will likely be reasonable. However, they can start as early as June. Any information about the economy's strength and further inflation trends is a guide to action for investors in such conditions. In this regard, reports on retail sales, which according to Bloomberg experts should grow 0.8% in February after a fall of 0.8% month-on-month in January, and producers' prices data could rock the Euro-USD's boat. PPI is expected to grow at previous pace, 0.3% month-on-month, and regardless of the statistics, the Fed will have the final say. So the idea of the main currencies pairs consolidating ahead of the FOMC's meeting on 19-20 March remains valid. The Euro-USD's inability to hold above 109.45 should be the reason for us to build up previously opened shorts. And that would be all from my side. Guys. Thank you for watching. Until next time.